Coming up on Business Incorporated today, IMF predicts Ethiopia's economy will grow 2% this year. And Mali gets $57 million from IMF for post-COVID recovery. And Kenyan banks cut deposit rates to 8-year low at 6.3%. Hello and welcome to the program. I'm Ladi Williams. We tee off today's show with market numbers from the African continent. Nigeria's main index amplified Tuesday's marginal gains, rising 0.23% thanks to a 1.63% gain from the banking sector. This comes after Zenith Bank announced its 2020 full-year earnings, announcing a dividend of 2 naira 70 kobo per share. According to the bank's financial reports released on Tuesday, its group's gross earnings jumped by 5% to 695.45 billion naira, up from 662.3 billion naira reported in 2019. And profit for the period rose to 230.565 billion naira. GSE in South Africa was also positive at intraday, jumping 1.11%. Only the EGX 30 was in the red, falling 0.32%, and Kenya closed positive on Tuesday. And it was a different picture in the Middle East, where major markets were mostly negative, except Saudi Arabia's index, which was marginally higher by 0.06%. On the flip side, the Qatari index fell 0.67%. Elsewhere in the United Arab Emirates, Dubai's index shaved off 1.55%, while the Abu Dhabi index lost 0.73%. And now let's get the British pound that continues to surge against the dollar, although dipping slightly. It was still over 0.5% this morning. Let's talk to Juliana now for updates from London. Hello, Juliana. Great to have you.
Hi, Laddie.
Yeah, and the pound, the rally keeps going strong. New Year high at $1.42 this morning. Take us through the numbers and drivers.
Yeah, well, the pound is continuing on this bullish run. It's been doing so since the beginning of the year, but we're seeing new highs at mid-trading day. It's really because Brexit, we still keep talking about Brexit, but it appears to be as if some of the woes and the fears could be levelling out. Prime Minister questions are ongoing in the House of Commons, and for the past couple of weeks, we haven't actually had any Brexit discussion, and this is really strengthening the pound. Also, as well, I don't know if you heard, but Britain is coming out of a lockdown, which does mean that the economy could start lifting up again. And that's getting investors excited, which is why we are seeing this increase in the pound. The FTSE All-Share at intraday is up 0.32%. The FTSE 100 is up by 0.08%. And the FTSE 250 is up by triple digits, 1.18%. In the currencies market, the British pound way up on the US dollar by 0.25%, up on the euro by 0.22%, and up on the Japanese yen by 0.78%. Worth mentioning very quickly, Alani, that some of the main risers on the FTSE All-Share at intraday are commercial property builders. Now, they've had a huge slump over the past couple of months, or almost up to a year, because of the stay-at-home message by Boris Johnson. A lot of people were asking what is going to happen to those big skyscrapers in the middle of the city, but people could be returning to work, which is why we're seeing Land Securities shares up 1.97%, and British Land Company, their shares are up by 1.84%, a massive fall for them in what's been a really difficult year.
Yeah, interesting. And profits at Lloyd's banking group plunged 72% after the bank had to protect itself from a potential jump in defaults linked to the COVID crisis. What are you hearing about this?
Quite interestingly, on the FTSE All-Share, the banks are what's really dragging the FTSE down. There's a little bit of global anxiety about inflation at the moment. But one of the biggest risers on the FTSE today is Lloyd's, even after they announced their revenue slump of 72% last year. And that's really because their outgoing CEO, Alexander Hortio-Osario, has announced the dividend. Dividend will be restored for the first time since the Bank of England governor put a cap on that. That's really cheered investors. And also they have announced cost-cutting measures over the next 12 months of over £4.2 billion. That does include, unfortunately, more job losses. I believe over the next couple of months, we're expecting 1,000 jobs to go. But the main story, of course, is this 72% plunge. They've put it down to several reasons, obviously COVID being one of them, and impairment loans. And now not only do banks that are focused in the UK have to deal with putting aside bad credit, the government were giving away billions, they're not expecting to get all of that back. But there was a huge scandal in the UK, which has been going on for about 10 years, which is called PPI, or Payment Protection Insurance. PPI, everybody in the UK knows that term. And banks were obviously selling bad insurance. They've had to pay it back. And Lloyd's just finished paying half of that back last year, which is why they've put aside so much money. But the money they put aside wasn't as much as a lot of observers had expected, which is one of the other reasons why their shares are still trading higher at intraday.
Well, let's look at the real estate industry now. The stamp duty holidays to be extended till the end of June. What's prompting the extension?
Well, we don't know yet. Nothing has been confirmed. In fact, if you look at the British media sites at the moment, the Treasury are not commenting. And that's because, of course, we don't know yet. We will know this time next week when Chancellor Rishi Sunak stands up in the dispatch box and delivers his highly anticipated spring budget on the 3rd of March. Stamp duty is one of various sectors that are vying for continuity. Well, the stamp duty holiday, which has been ongoing for several months now. This has really seen a surge in the housing market. The sector has been doing better than it ever has. In fact, I believe as house prices are at a 15-year high, and that's because, of course, people have got more money in their pockets. So even though the economy has really pretty much been on a standstill, the housing market activity has really surged. It also takes a long time in the UK to buy a home. So even though stamp duty holiday won't be lifted until the 31st of March, if you haven't really agreed to sign off on your home by the end of last year, then it's way too late. So a lot of housing market stakeholders have been asking for this extension. It was the Times newspaper that has first reported it, and all of the media have picked up on it, saying that the Chancellor will extend it to the end of June, but we don't know yet. So we'll have to wait and see. But I'll update you and Chimmy next week, Wednesday.
All right, no problem. I guess we'll keep tracking that to see how it goes. All right, thanks for the update, Juliana. Do enjoy the rest of your day.
Thank you.
And the European stocks were mixed today as markets digest remarks from the U.S. Federal Reserve Chair, Jerome Powell, on Tuesday as he attempted to ease some worries around the higher interest rates and inflation. Let's get more on this from Ashutosh Pandey. Hello, Ashutosh. Great to have you. The U.S. Fed Chairman, Jerome Powell, sought to soothe the market concerns around inflation. How have the markets in Europe responded to his assurances?
Well, there was certainly some semblance of calm there after they've been nervous all this while this week because of inflation concerns, higher bond yields and all sorts of that concerns related to that. But the statement from the Fed chair there really must have soothed their nerves a fair bit, because he says that the U.S. Is still long way from its inflation and employment targets, and it is going to continue. The Fed is going to continue with its accommodative monetary policy. If you look at the DAX behind me, that's fairly upbeat there. That's because today we also got in positive data from related to German GDP. They came in at 0.3% for the fourth quarter. That's a revision from 0.1%, and it was again manufacturing doing booming. Manufacturing sector is booming here. There's been strong demand for its goods from China, and then the construction sector was doing well. So all in all, it seems that the German economy is actually weathering the lockdowns pretty well, much better than anticipated, and it's also to do with the fact that perhaps there have been some learnings from the first lockdown, and the businesses are trying to implement those learnings during the current lockdown, and that's the reason why they are able to work around all these social distancing rules.
And UK holidaymakers in droves are booking tickets for holiday destinations in Spain, Greece, Italy, after Prime Minister Boris Johnson announced plans to resume international travel. But will those countries be equally excited to welcome them?
And that's a big question, isn't it? Because the folks who are booking the tickets, they are upbeat, they are excited, and they are hoping that perhaps the situation on the COVID front in all these countries would be as bright as, say, it is looking in Britain. But that's not a given. These countries are recovering from the pandemic at varying pace, and not many countries would be really so excited, or they wouldn't want to jump the gun to get international tourists to come in to cross the border. So that's going to be something that we would be looking forward to, or we'll be tracking that over these few months, because a lot would depend on how the vaccination drive proceeds from here, and how the virus mutations, how effective they are against this mutating virus.
So what does this rush mean for the travel and tourism industry?
It certainly is a positive sign for the travel industry, which has taken a major battering because of the pandemic. A pent-up demand is much better than a lack of demand, and it's actually quite an optimistic sign that people are ready to pack their bags and leave for holiday destinations, despite all the economic pains that has been unleashed by the pandemic. But I think it would be too early for them to rejoice as yet, because there's still many uncertainties around. There's still no coordination as far as opening borders between countries are concerned. There is no clarity on whether there will be a vaccine certificate or not. There are hardly any takers for a vaccine certificate that has been advocated by international travel bodies. So there is a lot of uncertainty there. But on the positive side, if you look, the fewer the cases and fewer restrictions would mean that there is a lot of demand for domestic tourism. And we all know that domestic tourism accounts for like 70% of the total tourism spending. So that is something that they would be excited about.
All right, I guess we'll hope for things get back to normal. All right, Ashutosh, thanks for the update, and do enjoy the rest of your day.
Thank you.
And shares traded mostly lower across Asia-Pacific markets today as investors turned cautious despite remarks overnight from Federal Reserve Chair Jerome Powell that attempted to ease some worries around higher interest rates and inflation. In Australia, the benchmark ASX 200 fell 0.9% to 6,777, led by losses in most sectors, including a 0.45% drop in the heavily weighted financial sub-index. Japanese markets returned to trade after being short for public holiday. The Nikkei 225 fell 1.61% to 29,671, while the Topix index declined 1.82% to 1,903 points. South Korean shares also fell as the Kospi index dropped 2.45% to 2,994. Chinese mainland shares also traded lower. The Shanghai Composite dropped 1.99% to 3,564, while the Shenzhen Component Index fell 2.44% to 14,870. Hong Kong's Hang Seng Index tumbled nearly 3% in late afternoon trade, even as the Hong Kong government said it will spend more than $15 billion in the coming financial year, measures to bolster its recession-struck economy. And we'll take a break now. When we come back, we'll look at Ghana's financial sector. That's in a moment. Do stay with us. And on Tuesday, the Bank of Ghana issued a policy to promote and guide the development and use of crowdfunding products and services. The policy seeks to ensure that crowdfunding services complied with data protection and customer privacy regulations, good governance and accountability, and relevant anti-money laundering and combating the financing of terrorism norms. Alabi John Kennedy, a managing partner at Bespoke Business Consulting, joins us now to talk more about this and Ghana's financial sector. Hello, Alabi. Thank you for joining us.
Hi, thank you for having me. Good afternoon.
Yeah, great to have you. So the central bank has released their policies for the development of crowdfunding products in the country. Can you tell us more about these guidelines and how much do you think it can achieve?
Basically, the crowdfunding has actually been with us for a very, very long time. In Ghana here, it's called SUSU, and most especially this kind of ways by which monies are collected or funds are collected and put together for a certain purpose. What the Bank of Ghana has done as a regulator is to put policies in place to be able to regulate the use of crowdfunding. And the way things are right now, we have been able to embrace the digital payment system, which we know as mobile money in Ghana. Now, what the mobile money does is that everybody can use, whether you have internet or you don't have internet. And this platform is being used by virtually everybody, whether you are educated or you are not educated, you can have access to it if you have basic phone. So the Bank of Ghana noticed that this system is being used by almost everybody, and they can use that to perpetrate crime, fund terrorism and money laundering and all that. So the policy is basically in place to be able to regulate the use of crowdfunding so that it won't be used for financial crimes, money laundering, or any other purpose which is not intended to be used in Ghana. So basically, that is what it is.
So far, have any other laws or directives been issued to position the financial sector to leverage digital technology for inclusive growth, and how effective are they?
Well, for the digital system in Ghana now, it is highly used, and that's one of the major reasons why the government is even trying to regulate, try to tax, because now you have so many people in the financial system. If you go to the rural areas, it is very easy for you to be able to transact business because of the digital system. And the digital system has to pass through the banking sector, whether it's like the normal banking sector, to be able to cash in and get e-money and digital money out. So basically, the financial industry is actually part and parcel of this, and they now intend to put certain measures in place to make sure that they are able to harness the benefits of the digital system. For example, the crowdfunding, it's basically the Bank of Ghana decided to say, okay, what we can regulate is the donating-based crowdfunding and the reward-based crowdfunding, and this will also pass through the financial system. So as it is, both the masses and the financial industry are really, really benefiting from the digital system. And measures are actually in place, systems are in place, security and strong IT systems are in place to make sure that things move well and they're able to harness the benefits of the digital system.
So what is your outlook for Ghana's financial sector this year?
Well, the financial sector, comparing it to that of last year, most banks made profits, even though they were not able to meet that targeted profits. However, they understood that there was a condition last year, and this condition actually started again due to the COVID-19 situation. So they're also trying to make sure that they penetrate the rural areas to be able to scoop on board the unbanked people and provide services, customized services to them, so that at the end of the day, they can also benefit from it. So by and large, I don't expect anything different in 2021 as much as it happened in 2020. There's high possibility that they'll make profits, they'll be able to penetrate the system and provide needed services to the masses of Ghana.
Okay. All right, Alabi John Kennedy, Managing Partner, Bespoke Business Consulting. Thank you for your time.
Thank you for having me.
An International Monetary Fund is projecting Ethiopia's economy will grow by 2% for the current fiscal year, which began July the 8th, 2020. According to the IMF, growth is expected to rebound to 8.7% between 2021 and 2022, consistent with a global recovery. Risks to the economic outlook are tilted to the downside amid uncertainty regarding the magnitude and duration of the pandemic, as well as other risks, including political uncertainty and the locust infestation experienced in some parts of the country. At the same time, the authorities are now moving to enhance domestic revenue mobilization On social spending, the IMF says the indexation of benefits for the rural and urban poor to general inflation is expected to improve the adequacy of benefits in these programs. And Mali has secured $57.6 million in financing from the International Monetary Fund as part of economic reform program supported by a $191.9 million extended credit facility. The program was designed to strengthen the state's budget stability, increase tax revenues, and address structural fiscal pressures to ensure a more sustainable, growth-friendly, and pro-poor fiscal policy. But with the COVID-19 pandemic, the IMF says the program had to be readjusted to enable the economy to recover, to assist the government in implementing the measures needed to mitigate the effects of the crises. The new investment brings the total IMF commitment under the ECF with Mali to $115.3 million. And banks in Kenya have cut fixed deposit rates to an 8-year low on bankers' reduced appetite for savings following a slowdown in demand for loans. Data from the Central Bank of Kenya shows that the deposit rate dropped to 6.3% last December from 7.1% in December 2019, the lowest level since February 2013. The fall is linked to a rise in fixed deposits from wealthy investors and firms in a year when restrictions imposed to curb the spread of COVID-19 reduced investment opportunities that also cut demand for loans. Falling returns and savings is a blow to high net worth investors and cash-rich firms who last year opted to hold onto cash, leading to a pileup in bank accounts. And that's a wrap on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.